Dylan, what would you say? I know you've had a couple of successes. And I don't want to spill the beans. I know one of them is a stock, and the other is another entity. Can you talk a little bit about that?
Yes, sure. So my biggest success, as I'm investing for 11 years now, in terms of the shortest amount of time to make the largest percent gain, was Bitcoin. Before the crowd came in June 2017, Bitcoin price was 2,000, and my exit was January 2018. So 7 month hold period, and my exit price was 10,000. I think it was pretty much exactly 2,000. So five bagger. So in 7 months.
So you don't mind if I fire off some questions to you?
Yeah, go ahead. Go ahead.
Okay. So here's my question to you: what sparked you to actually buy it at that specific time? Because I'm sure you knew about it beforehand, or did you?
I did not know about it, actually. I'm trying now to be more like looking at news and looking at social media and like trying to like kind of keep my finger on the pulse of things a little bit. But at that time, I was kind of just doing my thing. I like reading, so reading a lot. But if you read, you're not going to learn about Bitcoin. You like the books will be written about it like 10 years after it's already done its thing. You have to get something a little more current, sort of social media, podcast stuff like that. So I try to do a little more current stuff to keep my keep posted now. But at that time, I had not heard about it. I never heard that word before until my dad started talking about it, and believe it or not, he got into Ethereum at $9 earlier in 2017. So he made a decent amount of money there, and sort of funny because he actually never logged on the website or anything. He's not very good with computers, so ironically enough, he made a killing on this all via his coworker who did all the buying and selling for him, which is sort of funny. But yeah, it's the first time I heard about it, and then at first I was a little skeptical, and it sounded kind of like a Ponzi scheme, and that's usually what those things are. And so I dug into it, and I sort of started to understand that this guy was basically trying to revolutionize the area of money and make it so you don't have trusted intermediaries. Anyways, and that was a choke point for forever. And he had figured out some solution that got rid of that essentially. That was based on math, and I was like, wow, that's big, because now the incentive is to go there instead of trusting in third parties. And it might take 50 years or whatever, people stop trusting the US dollar. Eventually they're going to stop trusting it. It's going to have the same fate as any fiat currency in history. It's going to go to zero. So then what do you go to next? Gold. Well, gold doesn't work. You can't buy someone online with gold. You know what I mean? You need something that's digital, that's fast, all that stuff. So that is a very good solution. And there's a million knockoffs, but they're knockoffs. Bitcoin has a very good incentive structure there.
So let me ask you this: four-figure type increases, right? Like hundreds of over 100, like 1,000%.
Five baggers, so that's what, 400%?
Yeah. Okay. So 400%.
In 2,000 out of 10,000.
Yeah. So here's my question to you: is how did you decide when to? Did you lock in any profits at all? Did you sell a little bit off, or are you still holding it from that point?
Yeah, no, Charlie, I've always sort of instinctively been sort of a all in, all out kind of guy. And obviously, as you get a larger portfolio, you can't really do that if you're trying to invest in some tiny company where the liquidity is, let's just say, it's trading, $200,000 changing hands in this via this company's ticker per day. You can't bring $200,000 and not drive the market up. You can only bring 5,000 or 10,000 or whatever. So that just sort of forces you to sort of like slowly get in and slowly get out. So as you grow larger, but when you're small, you can just literally full account, all $10,000 or 1,000 or whatever the hell you have. Then you can be it's much easier to do it that way, which is how I did it back then. So
okay, cool. So you're still holding on to that same position, or did you sell any off?
No, I sold. I sold.
Okay, fair enough.
That's why it was a full clean transaction from June 2017 to January 2018, 7 month hold roughly.
And what made you?
7.5 months.
Maybe I didn't catch it in the answer. What made you? What was the trigger point which made you say, "Okay, I'm out"?
The whole selling point of Bitcoin was, at that time in 2017, was once blah happens. I don't even remember what the whole blah was, but it's like once we get to this point in 2017, all the institutions money, and then it's going to go. But it was all retail. It was sort of a GameStop-y sort of thing. It was all retail money that was and bringing it up. It was all like the street shiner down was talking about Bitcoin. It was all just retail money coming in and sort of Ponzi skiing up. So it kind of got ahead of its skis. It was way more value than it would be. Now it's hard to say what Bitcoin's true value is, but it would be based off of kind of like the U.S. dollar, meaning like, so what is the U.S. dollar worth? Like if you take the U.S. dollar and you go to China, what can you buy? Like, you can buy a lot of stuff. You can buy, you take all these dollars floating around, there's, trillions of dollars, and you go there and you can buy all the stuff that the Chinese factories produce. Well, that's a lot of thing. What if you had the Filipino peso? All the Filipino pesos all in the suitcase, and you want to buy stuff in China? Not so much. You could buy maybe a few factories output. At least the way I value Bitcoin, it's how many Bitcoins would take to buy something. How much can you get with all of it? And meaning, and that's sort of based off of how many people are using it or as a store of value, using it as a a unit of exchange, as money. Because Bitcoin in the early days, everyone was speculating. No one was actually storing or using it to buy things. It was overvalued relative to its fair value, I guess you could say. So that's why I sold.
Okay, perfect. Yeah, I'm not going to get.
It's still bullish on it. It just
Yeah.
was kind of like a stock that's taken off, and then you sell, and then you wait for it to drip down, and then you buy again, kind of thing.
So perfect. So you had a specific catalyst event or whatever. You sold it at that catalyst event, and then you made you made your profit. Is that fair enough to say?
Yeah. So the intention was to buy in lower, and long story, but I was going to buy in at 4,000, and it didn't end up happening due to a long, boring story.
Perfect. So what did you learn from that? I guess.
Yeah, I mean, A, I was lucky. B, I was also right in terms of the incentive structure. And time will show. I mean, obviously, we really need to fast forward 50 years to really show that Bitcoin keeps growing in adoption and market share, I guess you could say, in terms of like people deciding to spend either US dollars to buy groceries or Bitcoin or gold or pesos or whatever they're using. I think that share of people using Bitcoin will grow over. It's just not something that grows fast. I mean, think about the US dollar like in the late 1700s, or early 1800s, probably a better time. Really, it wasn't really worth much. If you took all the dollars that were around back then and tried to go buy some large amount of stuff in Europe, that was where the money was back then in the 1800s. You probably couldn't buy very much. It's built up over time in the last like couple hundred years. The US dollar has sort of built up, but it takes time. So I don't expect Bitcoin to really do really well. Unless there's decades going over where there's a shift and people are sort of slowly shifting over. I don't expect it to happen quickly unless there's some catalyst event like CBDCs are mandatory and everyone just like jumps over to fucking Bitcoin.
Okay. Anything else you wanted to say that you learned, or is that basically it?
I think it's basically it. I mean, it was a chart is basically showing it was it was an early like sort of hypersonic sort of chart. Basically, it was like slowly building and slowly increasing. Like that position was like it just went up pretty much every day. Really, it was like 2000. The next day was like 2020. And the next day was like 2034. Next day was like 2032. Next day was like 2045. Next day was like 2100. Like it just was always kind of growing. So I was lucky in that I was like my timing was close to perfect in terms of like a short term move to make a lot of money. Obviously, I could have bought when it was a penny and made more money, but it would have been a very long hold time. In terms of the most amount for the shortest time, it was very good in terms of the timing or whatever, but also just learning about it and being like, wow, this thing will work long term, and getting lucky with it. Great. I mean, I could have been better and got out at 20 because it had a high of 20,000 back then, but I didn't catch that.
Any other success stories you want to talk about?
I can also talk about Summit because Summit was something I did a little later. I'm still in Summit now, but
and by the way, before
about the end of the year,
we do have video on Summit earlier. This is about 4 or 5 months ago. It's Dylan's baby a little bit. But go ahead.
Exactly. Yeah. It's just treated me very well, and it's checking every box. So there's no red flags. Well, there's a minor red flag where they're like, "Hey, it's a stock offering or not." I'm like, wow, thanks guys. I wish I would have known because the stock just dipped whenever I said stock offering. So I wish I would have bought right then, but they didn't tell me they were doing a stock offering, and that was really a mess up on their part. And I was not expecting that from this A class team. But some like presumably some doofus that came up with that because it got canceled quickly. So I guess I wouldn't really call that a red flag, but I guess a very minor red flag. But yeah, they're checking every box, so I'm still excited about them. And but yeah, like earlier when the stock was it first came on our radar in December 2022, it had gone from under $1 and rapidly gone up to around $4 when I first saw it, and it checked every box. I was like, oh my god, there's no analyst following it. Duggan, who had done so great earlier, had bought most of the company. He had made a loan to the company to buy this rights to this drug. He was putting all his money into it, and then the market started just pretend like that was worth nothing. So I always get excited when that's happened. When I see true value and checking every box, and the market just is just ignoring it. I feel like it's just someone's just taking their $100 bill and saying, "Hey, you want this for $5? I mean, give it to me." So yeah, eventually I got in and I waited for the stock to drift down and got in around $1, a little over $1, and then how that we got out at we traded position a little bit, but got out around 24.50, and that's been kind of the most money we made. And ever since then, it's just sort of like treading water since then, pretty much. I mean, now it's obviously down to like, I think it closed at like 14 on Thursday, high 13, 14. But yeah, it's been sort of choppy. It's been all the way up to 32, and then all the way as low as, the recent low of I think it was around $13, a little under 13, 12 and change. So, made great percent. I mean, the best year I had was the 200% year 2 years ago. So that was a good best year in a while. 200%.
Perfect, man. You know what? It's and to go to mine, unless
you want to go to your
it's just one because I'm actually looking at the dates of my stock, my biggest success, and it's ironic because actually when I bought this stock, it's almost 10 years to the day. It's almost 10 years to the day because I remember when I bought it, I think it was.
And what was your position sizing on that one? What was like a 1% or what was it?
Oh, remember I didn't have as much money as then, so it was a good.
But still, of your portfolio.
Yeah, portfolio a good 8%, 8-9%. So it was.
Oh wow, you had a pretty high conviction.
Was a very, 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 very significant percent at that time. So anyway, let's back up to that moment. Brexit was, I have the date here. Brexit was June 23rd, 2016. We're June 21st, which is crazy. It's
wow.
But yeah, so I had a friend of mine. I guess I won't name names. Let's call him Joe. I had a friend of mine, Joe, who was an investor for a long time, and I trusted him as I wouldn't call him a mentor, but he was telling me about specific stocks. And at that time, I was a very novice investor. This was 10 years ago, and I'd been investing for a little bit, but not too long. Maybe at this point, maybe a year and a half, 2 years. And he had said, Chris, I know a very good company here, and it's paying one heck of a dividend. It was paying 8% somewhere along. He said, and this was Blackstone, essentially, which was a real estate / kind of bank company, which had a very good track record of very good management, good solid dividend for a long time. And I said, well, Joe, how much should I put in? He said, I'd put in a decent amount. I could definitely see the stock doubling in no time.
I did a lot more than that.
Yeah. So the ticker is BX, and if you look at it back June 2016, so it was $24 right at that time, and it kept on saying around the $20, $30 all the way to like 2019. 2019 it finally goes up. 2020 it finally goes up to $62. So not great, but 2021 is when I really made my money. 2021 it goes from so COVID has a low back down to 37. By November of 2021 it goes up already $150. So
no boy,
$150 with an 8% dividend, sitting at 24.
You're making
at $24.
You're in at what, 16? You said?
Oh no, I was in at 24.
Oh, 24. So that's, it's a long hold time, but it still was like a
long hold time. But remember, during that whole time, I'm
Yeah, you get
collecting
the dividend. Yeah, yeah,
I'm
yeah.
collecting 8% dividends every single year for 10
Yeah.
years now. I mean, I haven't quite made my
Taking
money
all your
back.
money out.
And by the way, I have not sold any position of it, which I probably should have, because now the stock is at 123, which is not bad, but that stock has been up at one in the 190 range.
Should have done a little Dylan market timing, man. Like,
Yeah, probably
that's a blow off top.
should have done some market timing. I mean, time will tell, but I mean, I'm almost at a point now where it's like not much I can do wrong with this stock. I mean, the risk of it going out of business is fairly low just based on their asset classes, et cetera, and how much they have in real estate, et cetera. So, I mean, there's always a chance. Yes, hindsight is 2020 when it was 190 for a very very short period of time. I could have traded and bought it
$1.90 or 190. Oh,
190. I think it was 190 at its peak. Hold on, let me see. 190 at its peak. But again, here's the problem: is that hindsight's always 2020. What if I would have sold it all at 100 years ago? I wouldn't be collecting the dividends, and I wouldn't have the extra $20. So it does actually now, even just talking to you, it does open my mind to do a little bit more trading. You know what I mean? Or maybe selling half. But
yeah. More like what you're doing with gold, where you're kind of like downsizing the position. Not that you don't like the company; it's a great company, but you're like, this is getting a little overvalued. You're like, just let me sell a little down.
Exactly. So, like something like CrowdStrike is probably something which I ended up buying 3 or 4 months ago. Literally doubled in 3 or 4 months. I mean, scale that puppy back. You know what I mean? Because it's gone what they call parabolic. Parabolic just means it's just blown up. Yeah, so it's blown up. So that was a case of a few things. Number one is you don't find many stocks paying an 8% yield. You know what I mean? That's guaranteed and that's growing. So that's number one. Like we did actually go through two stocks in this podcast.
Not growing. I mean, loan was not growing very much.
Yeah. Loan. I mean, we already discussed. Go back to our podcast about a month ago. LOAN. It's there. We discussed loan. We haven't really discussed that much about dividend stocks because we're more growth investors. I think even myself. You know what I mean?
Value growth.
Value and growth, less than income investors, which I guess actually could be an idea, Dylan. We may do it. I mean, it's not something we know about, but it's something we could definitely touch on in the future.
I mean, I've definitely done plenty of dividend stocks and all that sort of stuff. But yeah, like I was saying with the loan thing, is that as time goes on, my portfolio will start to transition into like having a cash flow dividend portfolio, position in my portfolio.
Yeah, especially when you're older and want the income coming in. Sometimes
it's more to replace income so that I don't need to spend working. We both have day jobs, obviously. I'd rather have my time back, so that gives me my time because I can't take the stock certificate to the grocery store and and get food.
Yeah, definitely. So taught me that patience is a virtue, especially when it comes to high yield dividend paying stocks, because you can almost be at a bulletproof type thing like loan. You could be bulletproof in 10 years, even if it didn't grow.
Yeah.
Okay. You know what I mean? But when you have the growth and the dividend, man, I mean, if you can get both, I mean, that's just French kiss, I mean, on that, so that was.
You want me to what? I'm just kidding.
That was for sure one of my better positions. Do you have any questions, comments about it, or?
Yeah. So when the guy, Joe, I guess we'll call him, when Joe told you about that, what was it that, I'm assuming you had other recommendations that you were kind of like, or whatever, or went with it, didn't work out. What was it like in hindsight that you did right? Like I'm assuming it wasn't all luck.
No, it wasn't all luck. A couple of things. It had been trading at a very good PE at the time. I think the PE was a 7 or something like that. It was trading at a good PE.
Smokes, wow.
And it was paying a dividend. And the also thing was Brexit happened, and they were really banging against the banks, right? The banks were just completely. So there's three things: good PE, good dividend, and the news cycle was negative towards it. So that's when I jumped in. Does that answer your question or no?
Not quite. There was other companies too, with other banks. Why that one?
Yeah. That one was specifically, I'm not going to lie, one of them was the dividend, management, and PE.
And what was it, the management that when you look back, you got right? They were just honest, like
Uh,
qualified. Like, what's the?
they had experience, they had the history, they had the track record, right? So, and there were, I mean, normally with a company that big, you're not going to put some dum-dum, or you shouldn't, not always, but
Hopefully not.
yeah, hopefully not in charge of money like that. And not only that, companies, from my understanding, that tend to pay a good dividend normally have to be good stewards of the money to pay out their cash flow, especially on a dividend deal like that and doing it for a long period of time. So knowing that management had a good track record of doing that, right, and being able to pay that high of a yield for that long gave me a lot of confidence. Give me a lot of confidence. There was no other. Let me just say this: there was no other stock that came close to the yield uh, that it was paying at that time for the size of the company, other than REITs.
Hmm.
Now it pays 2% or something like that.
Yeah, it's got so up. Yeah, that makes sense.
But
Okay, so that was a pretty good. So if you saw another one like that, another Blackstone that was real cheap, you might jump on it. So loan, I'm assuming you didn't buy any loan, but if loan had some good growth or whatever, something else that would check all your boxes, then you might do a position in there or something. Or
of course, yeah. I mean, now it's actually kind of got me kind of going back. Well, this podcast kind of got me thinking back on the
because
dividend.
loans at 10%, so
Yeah,
you're even better than Blackstone to that degree. The problem is obviously the smaller company, so you don't
it's a
have the
much
trend to the bigger company. Yeah.
smaller company, less room for growth, right? But it's not. I'm not trashing loan or whatever, but I mean, I'm greedy. I want growth. I want yield. I want management. You know what I mean? Like you got to click
You
off.
want it all.
Want it all. And you know what? It's hard to find, but it is possible to find it if you do look, and it is possible to find it with bigger companies. That's maybe me and you differ a little bit on it. Maybe not. Maybe not. I don't know. But I mean, obviously, it's going to be harder for a bigger company to grow. Obviously, when you're doing a billion in sales, obviously harder to go from 1 billion to two than it is to go from 1 million to 2 million, right? So, or
Yes, of
1 million to
course.
10 million, or whatever. So obviously that, but if you've got like high growth rates, which is why I'm a big proponent of Nvidia. Yes, Nvidia is a huge company. It's like a $4 trillion market cap. But when you're going in at like 70% margins and you're growing the revenues at like 30-40% a year, I mean, you're big and you're growing, So, I mean, that's just what I always, kind of hold by is growth, good management, forward peg ratio, right? Very, very good. Not just PE for your forward peg. Like, what do you expect it to do for the next upcoming month, upcoming few months? What's your projected growth rate for the next few months? Always look at that. So P is important, but the other thing about P I don't like is it doesn't also factor in how leveraged a company is. Okay, you could have a PE of 6 or 7. What if you're leveraged up to the debt? What if you're leveraged up to the hills, right?
Yeehaw. And you're a lottery ticket
Yeah,
to some degree, obviously.
yeah, exactly. So that was definitely my biggest play, which got me into, hey, look, what I mean, I can know what I'm doing if I'm looking at the right companies and I look at the right principles and put my money where my mouth is. And that's why we have this podcast to share to share our ideas, to put ourselves out there, to grade our picks, etc., which they're all out there for us to see.
Yeah, I mean, you're obviously more conservative than me. I'm going like 100% some positions, and you're doing 8% for your.
Yeah, yeah, 8, 10, or whatever. But if you can choose 8% and then 5% one company, and one company doubles and the other company goes up 60%. I mean, yes, it sucks that you didn't go in all with the double.
You also don't lose any money. Yeah, I mean, my portfolio is much more roller coaster than someone who just mostly buys the index or whatever. So that's for me. It doesn't. I like roller coasters. I don't like seeing my count cut in half as long as I
Well, I
know.
definitely don't like roller coasters on the way down. I mean, whoopee! I mean, I'm not looking at my thing. I mean, whoopee! It's all it's on the way down. Maybe you,
It doesn't bother me. I mean, recently my account's gone down by
but I
about
can't. You can't say
10%.
you're happy but I would say you're happy when it's on the way down, or maybe you
No,
are.
no, no. I'm not happy, but I wouldn't say
No,
the word expecting. I guess expecting is
no,
not
you
quite
wouldn't
the right
expect.
word,
No,
but
that's not the
kind
right
of. But
word.
I'm
Because if you
expecting
were
because I'm so
expecting it, you would.
concentrated, it's going to be volatile.
Yeah, yeah, but I wouldn't say expecting to work. If you were expecting it, you would have sold it at the high and then bought more at the low.
Yeah, yeah, yeah. I guess
Expecting it,
well, a
correct?
bit more anticipating. I guess I would. I mean, I'm expecting my like I said earlier with the summit video. So when I first did a major position in Summit, not first actually, we did a big move in Summit. The stock went from 450 down to 211 in 3 days, 3 trading days, and so I had a 40% loss, and that didn't bother me. It did. It was fairly expected. I didn't obviously didn't know the bottom. I didn't know how low the manipulators were going to bring it down, but I knew they were going to bring it down and it was going to go back up. So it was kind of quasi expected. So I just didn't know they were able to bring it. They're going to be able to bring it down all the way down to 211. That was kind of surprising to me. So I got on a Friday. They pushed it down from 450 to 350. I knew I was 99.99% sure it was manipulation because the news was the Chinese FDA had just approved their drug. This is fantastic news, and the stock's crashing. And there was a hit piece, a fake article that came out that was saying how bad it was, blah, blah, blah. So I was like 99.999% sure this was just manipulation. It was going to pop up. So we went to 350 on Friday, and that was the lowest it went pretty much on Friday. That's when I got in because I was like, I mean, if I was them, I would be like, I'm out on Monday, like don't take the risk. But they brought it all the way down, all the way till Tuesday, all the way down to 211. They kept pounding it, and then on Wednesday it was up to 11. So
Right. Well, actually, I
again,
got a quick question for you. I probably should be
sure.
through the telephone, but we got about 3 minutes left. What's your opinion on manipulation? Because like stocks like sometimes I invest, CrowdStrike, Nvidia, they can be manipulated a little bit by the crowd. There's no question, but less so than a stock that's thinly traded. I mean, do you look at manipulation as a good thing or a bad thing? I can see it both ways. Manipulate on the way up and on the way down. We got about.
Yeah, no,
I know it's a
totally. I
kind of a.
mean,
We got
to
about three
me,
minutes.
it's like a wave in the ocean. If you know the waves are, it doesn't. You can use it and you can make more money with the manipulation. But if you don't know about waves, it's going to pound you and take you down. So would I do the manipulation if I was, managing an account that big? Because it took them about $9 million to drive down that. I'm assuming that they had no more than a 10% of their portfolio exposed. So they're probably managing at least $100 million in order to push this thing down by, a significant amount. So now they're managing a large portfolio, and they're also doing something that I would qualify. I would describe as immoral, putting out a fake hit piece, driving down with good news, just so they can buy cheap and then sell. They look like they sold around the 11 to 16 range, from what I can tell from the volume, because they're a big position. You can see by the volume roughly where they're at. Because they're doing a short move. They're not in it for a year. You can't like they can hide it if they're in there for a year and just be like 5% of the volume, but they're kind of in and out. But anyways, I think it's immoral, but it is what it is. So to me, it's something I don't want to say take advantage of it. But it's
That's
like a
what I'm
way.
saying. You know what? You understand why it's a tough question because it's like I can understand why you're having trouble doing it because I know you're saying I would say it's an extra piece in the domino to definitely think of for sure, right? You have
Yeah,
to
yeah. You
know.
shouldn't just assume when the stock price is going down, this is because the market is now because one person can move, especially a thinly traded stock like Summit was back in the day. One person can make that move. It doesn't mean the market. The market is the majority of people participating in that instrument. You can have just one party move that in large amounts with a large amount of money, and it's not the market. The market you can see over a great period of time. Manipulation is short term. So give that stock a year, and that guy is not going to be able to. That party is not going to be able to manipulate that for a year, unless it's like super thinly traded. But if it's any typical like small cap stock, they can't or extremely difficult to be able to manipulate it for a year. The market's going to show its head. It's going to show its hand. It's going to show what the real price is. Over time.
Perfect. We got about 30 seconds, so we're just going to put a teaser in for next week. We're thinking, not sure, we're thinking of doing some of the worst stocks or stocks not to invest in.
Ah,
We're thinking about that
stocks
for
we
next
found.
week. Dylan, do you have any other pointers, anything for next week? We've got about 20 seconds. Go ahead. I'll give you the last word.
Yeah, I mean, in this biotech space, there are some quasi scams that I'm looking at and thinking maybe it's a good short opportunity, but we'll see. We'll see you next week.
Okay, definitely, crowd. We will see you next week.